Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can not only understand how we're currently positioned, but also what kind of opportunities we see out in the global landscape. You know, the economy continues to get just a little bit better, as I've talked many months in the U.S. If I look at the emerging market activity, especially China, we're starting to see some really vast improvements in a lot of their main indicators. Their GDP is looking obviously very good. Manufacturing data has picked up some of the highest levels in 5 months and so on. We own positions in China, we own positions in emerging markets, and I firmly believe that as we continue into 2013, the emerging market economies will obviously grow substantially more on a GDP scale than the U.S. will. The U.S. is slated to grow somewhere around 2% in 2013. I firmly believe that investors have to embrace opportunity outside the U.S. The United States is not the only place to invest, but I think a lot of investors unfortunately look at only one area, which is the U.S. for income opportunities and or growth opportunities. If I look at China as an example, and I just don't want to say China is the only bright spot in the emerging markets, there's many others, but I think China overall really has an opportunity to grow their GDP probably north of 8%. So if you kind of take a look at our GDP growing at 2, they're growing 4 times more. Most of the valuations in a lot of the emerging market economies are actually substantially less than the average P/E ratio of stocks in the United States. So again, a great opportunity, not only the GDP growth, which can add more to earnings, but obviously when you look at companies, when they have a cheaper valuation than the U.S. equities, you have a chance for upside potential and outsized returns. I think there's an opportunity where we look at the investment markets overall. A lot of investors have basically taken money out of equities or what they perceive to be risk assets, only to throw that money into a bigger possible fire, which is long-term muni bonds and long-term government bonds. Just in the last couple months, we've really seen the long treasury basically lose about 15% of its value. That's 15%, 15% of its value. So I always tell investors what you perceive to be safe is actually could be your riskiest investment. While U.S. government bonds are guaranteed by the faith of the U.S. government, they still have volatility. If rates start moving up a little bit, which we're seeing about a 2% rate of return on the 10-year from about a 1.48. That translation, about a 15% drop in valuation. Ultimately, I firmly believe rates will stay low probably for the next 2 to 5 years. But we're seeing just a little uptick, and it doesn't take a lot of uptick in interest rates to lose principal value. Also, what you have to look at is if you own too many bonds, especially long-term bonds, inflation is going to kill you. If inflation's running 3% and you're making 1.5 or 1.25% on your muni bonds, as an example, think about what inflation's happening to your portfolio. You're actually having a negative return. We're off to an incredible start for 2013, and with all of our managed accounts at Resney Wealth Management. But the number one priority when we look at our portfolio management is risk management in severe down markets. So while we'll still see a little bit of bounces along the road, we want to really watch for these big catastrophic events like a recession. Now, currently, all of our indicators are pointing away from recession, and we're looking at our market trend indicators, which are positive in almost all sectors, especially on the equity-based. And we look at our secondary sectors, which are our short-term trading indicators, are all positive too in many investment sectors, especially emerging markets. So I would go back to look at your portfolio if you're not a client, and if you have too much money in either bonds, long-term or intermediate, and if you have too much money just in the United States alone, you're missing all the opportunities on the other side of the fence. Of course, if you're a client and you have a question about your portfolio, please call the office. If you're not a client and you'd like to become a client, there is a difference. We invite you to experience it. Call our office for a consultation. We always like taking on new clients who are nice people to do business with. We do have a live TV show tonight in Southwest Florida. We'll be sending a reminder out on that. And of course, again, if you have questions in your client, call our office. And of course, listen and watch our TV show tonight live. This is Brian Resney. Have a great and profitable week.